My name is Michael McClune. I'm from the International Business Accelerator here in Los Angeles, although we operate globally. The IBA is the first accelerator in the US to focus on international growth and global expansion. We help foreign companies come here to the US as well as help US companies go across border. I also represent LAVA, Los Angeles Venture Association. I'm a leader in the global community. And I mentioned the IBA and LAVA because they're presenters and supporters of the program. LAVA, if you're in Los Angeles or Southern California, it's a founder meets funder ecosystem and community. So the other presenters tonight are the Milken Institute as the hosts, United States Commercial Service, both of whom you'll hear from tonight, Loyola Marymount's College of Business Administration, and of course, this whole event, the Startup Global, comes from our friends at the Global Innovation Forum. So they've done these around the country, and this is the first one that they've done virtually in multi-series format, and we're both honored and excited that they chose our community of LA and Southern California to base the first one. So a little bit of housekeeping rules or info. The layout tonight is we'll have an interview with a founder who decided to go global first before he ever did anything domestic. That'll last about 15 minutes, and then we'll go about 35 minutes with a panel of experts, international trade. And as always, we have a mix of policy and public sector and private sector and a little bit of academia. And then we'll have a Q&A session for the last 10 or 15 minutes. So please put your questions in the Q&A, and the moderator will look through them and will address those specific questions towards the end of the hour. So tonight's topic is finance and funding, obviously one of the more critical ones for all startups, particularly those going global. So at the IBA, we look at it, we're always trying to service three groups of people. Number one is founders of companies who have been able to survive and keep the lights on and just keep their staff paid, but they know that they have to bolster themselves in the next year. And we want to deliver them both the private sector funding and then the capital sources that come from public sector as well. The second one would be, you've done pretty well in 2020, but you really want to thrive in 2021. And then the third one is like the entrepreneur and that founder you'll hear from tonight, is you don't want to let the outside forces dictate your happiness and your success and what you do in business. So you realize you want to start a business and you want to do that in 2021, and you're going to go global from the very get-go. So again, our goal is to balance the insights and the resources of our experts here, of which there are plenty of resources that you learn about. You'll have a fertile mix of public sector funding like grants and loans and risk mitigation, and the private capital sources like venture capital, private equity, and of course banks. So if we have a chat, I will be there helping conversation and answering questions and providing links to bios. If not, I will send all that information to you afterwards. But Q&A will definitely be active, so please put all your thoughts in there. And so at this point, from the IBA and LMU, Global LAVA, Commercial Service, and of course, Global Innovation Forum and their Startup Global event, I'll turn it over to Richard Swanson, a friend of ours, Senior Advisor for the U.S. Commercial Service. And I'll talk to Brad, the entrepreneur. Richard?
Great. Thanks so much, Michael. Thank you, everyone, for being here this afternoon, this evening. We'll have a great opening session here with Brad Reed. Brad's the president of Transportation Innovations Group, TIGM. And Brad will tell you a little bit about that, but he's passionate about protecting the environment and pioneering the hydrogen economy. Originally trained as an artist as well as an engineer, Mr. Reed has over 28 years of experience as a corporate executive and brings a hands-on approach to project management based on years of experience in civil, mechanical, and structural engineering. Before joining TIGM, Mr. Reed was president of a group and co-founded the Lawrence Wayne Research and Development Company. And he even goes back further to the entertainment industry. And, today we're going to talk about a company that is very relevant in today's economy. It's the transportation industry. It's the light rail. It's the electric rail company type of environment. And Brad will give us some insights into how to finance your operations, how to finance your growth, and we'll have Brad say a few words, maybe about him, his company, and where he is today. So Brad, why don't you say a few words about your background and where we are today with your company?
Okay. First of all, thank you everyone for having me on. I'm really honored to be part of this group. TIGM is a really unique company. We started in the 70s and 80s as a engineering group that worked with all of the major theme parks around the world. We were an engineering company that basically pioneered a lot of the transportation systems within the Disney parks and the Universal parks. And for many years, we worked all around the world in Japan and Europe and all the parks in the US, and pioneered a lot of very pretty technologically advanced transportation devices. After 9/11, a lot of the hard entertainment industry died because ridership went way down and it never really recovered. A lot of the companies went out of business. We went into taking the technology that we had developed for the entertainment industry into the transportation industry. And since that time, in 2005, we formed a joint venture between my engineering company and a manufacturing company, and began to manufacture transportation devices for public entities as well as private entities. So we started with a private project in Los Angeles at the Grove. Some of you may know of the Grove shopping mall. Rick Caruso hired us to build a rail-borne vehicle that was self-powered. And we took a couple of years to completely redefine the idea of driving on rails, and took the requirement for external power source out of the equation. And since that time, that project got so much worldwide attention because of Rick Caruso's awards for Concierge of the Year for many years at that project. That car got an enormous amount of international attention, and we started getting requests for these cars all over the world. So when we formed TIGM in 2005 as a joint venture between an engineering company and a manufacturing company in order to do it all in-house, all of our orders had come from overseas. So, and this brings me to the point that I really would like to make, that the United States is way behind the rest of the world in urban rail transportation. You go to Europe and every city has a modern tram system. The United States between 1895 and about 1940 had electrified railway systems in every city in the country. Every city had one. And we let those all go after World War II. Between World War II and 1960s, all of the streetcars in the United States were decommissioned, and the rights of way were let go to highways and other streets. And it's a real shame because all the cities in the United States want them back, and it's really almost impossible to put them back because the rights of way are gone. And to put a normal streetcar with overhead wire in the United States is impossible. There's a lot of laws that prohibit overhead wires and high voltage in the streets. So we took it on ourselves to design a new system that does not require high voltage external power. We redesigned the system to be a self-powered tramway system, and we've since developed them in Central America, South America, the Caribbean, the Middle East, and China. And all of our major work has been done overseas. We do have projects in the United States, smaller projects that were done at the beginning of our evolution, and now we're bringing it all back to the United States. We're going to start selling them in Southern California, and as soon as our model for DFBOM is perfected and brought to fruition in Riverside, we're going to start building all over the country. So that's basically a real short history of what we've done. I don't want to get into too much technology because I know this is about finances. So I know you have some questions for me, Richard.
Yes, I got a few.
Okay.
We'll get in a few in the next 10 minutes here, I hope. One of them is, Brad, you brought up the foreign market, and I know our panelists following us will get into that as well. But, in the beginning, Brad, you started exporting before, you really started developing the domestic market. Is that true?
That's true, yeah.
Yeah. And so you designed your products and your services for those overseas markets, but you needed capital. You needed to finance those deals and those projects. It's kind of hard to do that, not thinking that, you might need some credit insurance or some working capital. How did you go about developing those first sales and that first capitalization of those projects in the early days going forward without sort of starting here at home?
Right. Okay. Luckily for us, we come from an industry where the business model allows us to capitalize on our clients' desire for a bespoke project. So in other words, we are a design builder. We don't build a product and store it in a warehouse and ship it. We design individual projects for specific clients with site conditions that require a certain product. So what we were able to do is, when going from the entertainment industry into the public and private transportation sector, we were able to bring that model with us. And when a client found out about us and wanted our product, we would go to them and say, we will develop for you a specific custom system for you, but we're going to need your participation. So we're going to ask you to, we'll get into a design build arrangement with us where we do the design for you under your capital. You will capitalize the design portion of the program. When we're done with the design, we move into build, and we will ask you to give us progress payments as we go. So most of our projects are done with the client's money. Now, a lot of times there is, we're heavily front-end loaded. We have a lot of expenses at the beginning of a project. So we were able to take advantage from the very beginning of the SBA and the commercial service. And we were able to get seed money from the SBA for a lot of these projects. And then as we get past the heavy front-end loading on these things, we can build much larger projects with the client's participation as a progress payment proposition. So it worked for us for many years doing it like this. Now, we were very, very lucky in the beginning to have the counseling of the U.S. Now, we took advantage of all of our local politicians. We got to know our local council members. We got to know our mayor. At the time, our mayor was Mayor Villaraigosa. He was very, very strongly behind us. He brought in the commercial service in his office to aid us and wrote a lot of letters for us to overseas clients. And we got our foot in the door in that way.
Right. That's right. It's interesting. It's almost like you went global before you went local.
Yeah.
But you leverage, and we'll learn this more in the next panel from the finance end. But also remember, would you agree that both the marketing and creating of demand is just hand in glove with the finance, the payments, and the ability to capitalize yourself in these projects overseas?
Yeah, definitely. We're in a niche market. There's only a certain number of tram manufacturers in the entire world. So yeah, we get a lot of word of mouth exposure, and we get a lot of exposure through the internet. So once a client decides they want to buy a big project like this, most of these projects take 5 to 10 years to come to fruition. Yeah. Once somebody's going to get into something of this size, they'll find our name because it's a small marketplace when it comes to tram manufacturing.
You bring up a good point too. When you're going, global right off the bat, you're sort of born global, you're going global. That's where you're retrieving your revenue back to your company to sustain your business model. I mean, there's got to be some sort of guarantee out there. Municipalities and foreign governments and foreign companies aren't going to just direct pay you and give you the capital and pay for your services up front. How did you navigate all that? How did you protect yourself? And how did your clients overseas feel comfortable enough to go forward and do direct business with you? How did all that work?
I'm glad you asked that. That really is the number one hurdle that we need to get over. First of all, learn a lot about the culture, and start making connections with local banks. Now, what we have been able to do, and Robert here on our panel is great help with us, we need to form relationships with local banks and get local banks in the country of our client and local banks in LA here to work together. And we obviously, when we get into performing manufacturing in the United States for a foreign client, and actually doing construction in a foreign country to support our rolling stock that is eventually going to be delivered, we have to form and provide them with performance bonds. So in our case, and in our industry, because our product is bespoke, it's custom, it's very hard to get traditional performance bonds. Most performance bond companies see us as being an
right.
And we utilize those LCs to basically serve as our performance bonding mechanism. And we build into our contracts with our clients the ability to roll back some of our income into further performance bonds. So we show them that we're willing as we go, we reinvest into our performance bond as we go.
Okay. Interesting.
Yeah, there's a lot of scope-based work. So we have many scopes in one of these projects, and as we finish one scope, we can parlay some of that income into.
Yeah. So the performance bond is sort of the protectant to the foreign-based municipality and the foreign-based client.
We write an LC, a standby letter of credit that has very exacting instructions built into it, whereby the client feels protected and he can action that performance bond or that standby letter of credit if there's a failure to perform on our part. And we can protect ourselves by having methods of curing anything that they see as a lack of performance. So
okay, great. We won't go too much into that. Maybe we'll save a little bit of that for Robert in the next panel.
Yeah, sure.
But you know what? Look where we're at today. Look where you're at today. Rail is coming back to the United States. Different transportation ideas are coming back to the United States. We've got a lot of electrical vehicle production still here in California. It's enormous. Lots of great companies like yourself. But where do we go in the next 6 to 18 months in terms of this? We're under, challenging times.
Yeah.
Things are starting to heat up again. And where do you see TIG in terms of finance, getting the deals done, doing the projects, keeping the relationships going with the foreign entities in the next 6 to 18 months? And then where do you see TIG in the next 5 years?
Well, you're right. They are very interesting times we're in, because there's, the industry we're in is mass transportation. You talk about electric cars, and there's an evolution in private transportation, but there'll always be a need, and I see a greater need for public transportation as we go forward. As we get over COVID and we can, get more people back on these vehicles, it's going to get back to normal. But what this strange time we're in now has given us the ability to do, really, is to step back and solidify our relationships with Exim Bank for all of our foreign projects, And we have found a private financial corporation here in the United States who will back all of our domestic projects. So we're moving into, as of this week, into a big project in Riverside, California. We're going to be
Excellent.
We're going to be producing a system there, and once that, and a new factory, as a matter of fact, we're going to be expanding our production capability, and we're going to be taking this model of design, finance, build, operate, maintain, P3. Actually, we're calling it a privately financed initiative, and we're going to take it all around the country, because the only way we're going to get electric mass urban rail transportation back into the cities in the United States is through private investment. It takes too long with the federal government, and we've found that by the time the federal financing hurdles have gotten over, everybody's too tired to do anything, so it doesn't get done. So we are working with
the high. Oh, that's a whole nother conversation.
That's right.
Yeah.
So,
you know, as we kind of wrap it up here, Brad, you know, I failed to mention that, you know, doing a little research on you guys, you just recently this week were awarded 3 awesome awards. Would you mind telling all of us what those were again,
well,
or what those are, please?
It's basically the Oscars in our industry.
Exactly.
It's called the Global Light Rail Awards. They're in their 14th year. They're out of London, UK. And it's a huge honor for us. Just within the week, we won Manufacturer of the Year, Environmental and Sustainable Initiative, and Customer Initiative. So this is a huge deal. In the Manufacturer of the Year category that we won, we beat CAF and Stadler Rail, 2 of the top 5 tram manufacturers in the world. So we're very happy about this. Our project in Doha, Qatar, which you see behind me here, is the project that basically was for all of these awards. So
just in time for the World Cup 2022, right? Well, great. You know, Brad, thanks. As we sort of get to the end here, I just want to thank you for bringing to light a company that's based here in Southern California, for Southern California, in an industry that if we go back in time, we should, you know, kind of remind ourselves that we were at the forefront of this industry 100 years ago. There's no reason why we can't be at the forefront now. And you're helping us get there with all the tools and all of the services and all of the support of all of us here today. Yeah. And I know you'll be a resource for us here in Southern California and overseas. And I know our U.S. Small Business Administration, our U.S. Export-Importer Bank, our U.S. and Foreign Commercial Service, my colleagues, Terry in L.A., myself here, we all wish you the best. We're here to support you. And I know everyone listening and watching you tonight is in your corner. It is great to have you here as sort of our showcase piece for the entrepreneur who is looking to not only start up, but start up again and again and again, and do it electronically and through means that are, you know, environmentally sustainable. And that is, I really, really appreciate your time you've given us tonight.
Can I say one more thing real quick?
Oh, you can say 2 or 3 more things, Brad. Okay. I think we've got like at least 30 seconds, right, Michael?
Okay. I really want to stress the fact that it was an incredible boost to our possibilities by taking advantage of the Trade Commission and the U.S. Commercial Service. I mean, they did so much for us. They have helped me in every country I've gone to. Now, to the point where when we did our project in Aruba, 5 years down the line, after Aruba was done, they still had not paid their last 5% payment on our contract. The commercial service sent somebody down there, and they got me my 5% back.
I won't say we twist anybody's arms, but
yeah, I mean, it's been so much. The commercial service has been incredible to us. Big help.
Thank you very much, Brad. Everyone, we'll hand it back to you. Thank you again for this segment, for kicking us off. We're going to look forward to getting more into the details, and maybe Robert could add a little bit to your great observation and highlights, Brad. Thanks again, you guys. Eugene, back to you. Michael, back to you guys.
Thanks.
Oh, good evening, everyone. I'm Eugene Cornelius, and I'm the Senior Director for the Center of Regional Economics at the Milken Institute. And I'm happy to be the moderator tonight of the panel that we have before us. We have some really great people. We're going to be talking about financing your international operations and going forward what you would need to know. So the first one on our list is Robert Shecky from City National Bank. We have Tracy Gray from the do I say 22 Fund? 22 Fund, okay, there it is. And we have Eric Rickett from Intuit. And they're going to give different perspectives about financing. Prior to being with Milken Institute, I was the Associate Administrator for the U.S. Small Business Administration, overseeing all 50 states of the Union and 21 export centers across the globe. I'm now happy to be here at Milken, but I will answer any SBA questions that we have related to that. So my experience has taught me the need of finance and what it means as the engine to small businesses, especially as they go exporting. So I'm going to ask the panelists, as I introduce them, to give me an overall question that I'm going to give them an overall question that I want them to answer. And then I'm going to drill down a little bit and ask each panelist specific things to their industry so that the audience does get a sense of who they are, what they do, and why it's important to know these resources. And then we will ask a general question at the end and wrap it up and take any questions that come through the question and answer boutique. So I'm going to start off in the order in which I introduced the panel with Robert, and I'm going to ask the question, what is the greatest funding challenge small businesses have when they consider exporting?
Hi, my name is Robert Cycali. I am very happy to be here today. And I manage international sales at City National Bank. My goal is to help small to medium-sized companies export their products and services. And banks can do a lot for a small company, not just the financing only. To answer your question, the biggest challenge is their balance sheet, because banks lend against or lend to companies that can repay the loan. So basically, there are different kinds of lenders. Some lenders lend against assets, some lenders lend against cash flow. And I don't want to make it a very technical presentation, but if you are a startup company, you're losing money, you have negative net worth, and so on, it will be very hard and very challenging for you to get a loan from a bank. But that doesn't mean you don't have other options. There could be private equity companies or certain kind of funds that are willing to put money and take a chance on your company. But in most of those cases, there is some kind of reward that they are expecting from a small business. So if it is an equity firm, yes, they will try to fund you, they will put money in the project, but they may ask for a certain percentage ownership in the company. So if you work to get your balance sheet in order and approach the bank that wants to work with you, then you have a good chance of getting funded.
Okay, thank you. And we're going to go into that other kind of financing with Tracy Gray, the CEO of the 22 Fund, and she's going to talk about venture capital. What do you find is the biggest challenge for getting funding in small business exporting?
Well, first of all, thank you, Jean, for having me here, and Terry and Milken. So we're a growth equity firm, which means we invest in companies to help them grow. We invest in manufacturing companies to help them grow internationally. That is our strategy. We are a mission-driven fund, meaning we are trying to have a positive impact on communities. So our mission is job creation in underserved communities. And our other mission is to build generational wealth for underrepresented people of color and women. So we're really interested in companies that are founded or run by women and people of color. So what I see as challenges is similar to what Robert said, but it's their financials are. So if you're a startup, you have projections, you have a pro forma, and then if you're an existing business, it's 3 years or so, 5 years, whatever, going backwards. But for me, I want to be able to see financials in a way that I can value your company or see how I'm going to exit. And a lot of small businesses, just because they're running small businesses, they don't have time, one, to have the proper financials, and two, are not completely educated or knowledgeable about what an investor wants to see. Similar to, they're not sure what a bank wants to see. So I think that is the biggest challenge. And it's the one thing I tell business owners, from startup entrepreneurs to existing businesses: have your financials ready and know them as well as you know your business, right? Because you're going to take my money or Robert's money, and if we want to know, you're going to be good stewards of our capital. But if you don't have your financials ready, then what makes us think you're going to take care of our capital? So I think that's the biggest challenge. And it's just the nature of running a small business. You're trying to run a business. And so it's easy to push other priorities down the line, down the road, when you're trying to make sales or create more inventory or manufacture. But I say have your financials be as important as anything else.
Excellent, excellent. And Eric, how would you answer that question? And please introduce yourself and what you are.
Yeah, happy to. Thank you, Eugene. And thanks to my esteemed panelists and for all of you joining the call today, and especially Brad, thanks for sharing your inspiring story of your company. I'm excited to learn more and take that tour that you mentioned once I pop out to the West Coast. Eric Rettig, I'm with Intuit. I sit in our global policy shop. You may recognize Intuit as the makers of TurboTax, QuickBooks, and Mint. And our mission is really to power prosperity around the world. And to get to Eugene's question here, where we fit into this financing piece is, we're an old fintech company, financial technology or fintech, whichever you prefer. We started in the 80s thinking about accounting, right? Our founder, Scott Cook, sat at this table with his wife trying to think about their small business and how to, scale that firm, and said, there's got to be a better way to do this accounting thing, right? And so fast forward to 2020, Intuit not only does accounting, but we also have a financing arm. And so what we see, Eugene, is a lot to what my fellow panelists, Tracy and Robert, both said, is a lot of these small firms, they're just trying to get off the ground. They're trying to, find $10,000 for cash flow purposes. And so what we do is we take a unique look of their financials, not just a credit score, but their cash flow, their accounting, their invoices, and it's real-time data. It's not 60 to 90 days old, right? And so from that data, we're able to underwrite these folks in a more comprehensive manner than, say, maybe they may have gone to a bank and been denied because of a bad credit score, or they were frankly just a young company, right? Less than 2 years without $250,000 to show in revenue. So I'll pause there. This space gets me really jazzed up, but a lot of the companies we work with and we see in our customers, they just have trouble getting over that first hurdle, and maybe they had a bad credit score, previously. But the exciting piece of this is fintech. We're here to work with banks and VCs to help small business owners get over that hurdle.
Well, great. One of the takeaways I just got from all three of you, and I have to say, as the former head of SBA, is that you have to remember that your financial sheets, your financials, are your essential marketing tool. As a small business, you spend a lot of money on marketing, you spend a lot of money and time on putting that business card together. the financial papers, your financial documents, that is your essential marketing tool, be it domestic or international. So to keep that in mind. So Robert, going back to you, we want to talk about startups because banks want you to come in when you are 2 to 3 years and you got some revenue to show and you got, but what if I'm a startup? What if I'm a Brad and I want to go into, an emerging market? How does banks help startups?
Honestly, it will be a very difficult proposition for banks to help startups, but at least not on the financial side. Because again, if the financials are not good, the cash flow is not good, there are no assets, negative net worth, no profitability, it will be very hard for a bank or any other institution, based on what I heard, to finance. But there is a lot more than just financing. So for example, you need a bank that has the ability to help you structure your transactions. It is not a simple thing because you are dealing with other countries. When you are exporting, they have different ways of doing things. They have different requirements. There are different ways how you can structure the transaction. So a bank that has experience in that, and just for information, I meet with so many companies during the year and I see what they do, how they do it, what are the problems that they experience and so on. So that is a very important thing for a small company, to have a partner with them, whether it is a bank or some other financial institution that can help them structure the transaction, that can help them mitigate their risk. And doing business in foreign markets is really have risk. You can sell $1 billion worth of product. That's not the issue. It's how much money, how much you get paid. So you need to get paid. You need to mitigate your risk, whether it is foreign exchange risk or the payment risk or other risks. So banks can help a small company in many different levels, not just the financing. So you want a partner that can be on your team trying to help you grow to the next level so that you can be ready to get a loan from a bank.
Well, that's true, but let me go a little further with you because that technical assistance part of the banking industry is under, but startups can also go to banks with a guarantee from the SBA or other grantors to assist in that. So I want to make sure that small businesses are aware of the products and services that not only SBA, but Exim Bank and Commerce have available to help them with that situation when they're brand new. Tracy, yes. I want to go to you and ask you a question. How does VC funding differ from what Robert does at the bank?
Well, it's funny because my firm banks at City National.
Thank you.
Because of their international expertise, and Steve Bash is a good friend of mine from City National, and TIGM is one of the reasons why I even started my firm, because I was in the mayor's office and that's how I heard about TIGM and Brad, and thought they've been my favorite company in LA since that time. I think that was 2012, 2010, possibly. So it's just funny, I'm on this panel with all these kind of connections, but I started the 22 Fund because of what the SBA called the equity gap for companies, where equity meaning equity capital, unable to get capital that wasn't just debt. Venture capital, private equity, growth capital is all created to help companies grow fast. Like you can slowly build your company, but if you want to, there's a lot of competition and you want to beat your competition to market and to other markets, then you go to venture capital or private equity. there's a lack of capital for especially manufacturing and growth capital for this particular segment that I'm in. And so that's what we're trying to do, is fill a gap. And also for women and people of color, the access to capital is really difficult. So venture is betting on looking at the future. They're betting on your future. The banks are betting on your past. So that's kind of the best way to look at it. So they want to know what you did 3 years ago. We want to know what you're going to do 3 or 5 years from now. And therefore, because they're numbers that we are, lack of a better word, we're projecting, but we're kind of making it up, right? You're kind of like, I think they could do this based on some things. We're going to take could take a portion of your company, and that's where the equity is. So you don't have to service this debt, because as being, small business, it's difficult to service debt. It's hard to grow if you have to pay debt. But we also have a model around revenue share. There's some companies that they don't want to give up part of their business, so we share in their royalties or revenue. And also we have an equity-like vehicle that is debt with warrants, which is an equity kicker, so that you could either pay it off or convert it to equity. So it's different than a bank, but the best way to look at it is like, they look backwards, we look forward.
Well, I think that's a good explanation, and thank you for that. So there are alternatives, ways of getting finances from banks and commercial lending and now VC. So I'm going to switch over to Eric, and we're going to first define for our audience what FinTech actually is and how you use your platform, and who are your customers.
Yeah, happy to. So yeah, I mean, that's a great question. What is FinTech? It's essentially, financial technology. It's the tech and innovation that aims to essentially compete with traditional financial methods, like banks and financial services, right? So, if you look around the world, I think it's something like 85% of lending goes through traditional, commercial banks. FinTech is kind of the tech component of this. So if you scroll back to about 2008, we had this, financial crisis, and small banks weren't lending to small businesses because of regulation, et cetera. The economy. You had this FinTech, which were tech companies essentially saying, hey, I can do what a bank does, but I can do it differently. You have a lot of these FinTech companies growing out of the 2008 financial crash, and are lending to small businesses, right? So that's essentially what FinTech is. Now, FinTech doesn't just have to be financing. It can be mortgage, it can be student loans. But for our purposes, we're talking about small business financing, right? So our company, Intuit, has a direct lending arm, which is called QuickBooks Capital. So if you're a QuickBooks customer, you use QuickBooks to do your accounting, your financing, you can actually get, that $10,000 loan, Eugene, we talked about, for cash flow purposes if you need. And you may have been, again, I'm glad Tracy brought up that point of serving underserved communities, because you may have been turned down by a bank, but because we know we have the data on your cash flow, like I said, on your invoices projecting forward a couple of months, it's real-time data. We're able to make that decision and say, hey, this business isn't just their credit score. They actually have all these great data points that help us understand them. So the underwriting's fast, it's more comprehensive from different points of views, and we're able to get that business financing that would have, potentially been turned down from another lending institution. And so, the average loan size for our customers is about 10 to 15 grand for cash flow purposes. These folks traditionally have about 2 to 7 employees. So we're talking about, the Main Street barber shops, but also startups that scale quickly as well, who need the capital. So I'll stop there, but I could go on and on, it's just a really interesting space to be in. And we saw a lot of this from your former colleagues at the SBA and PPP, and happy to go down that road. But we had some great learnings from that experience with folks as well.
Well, don't worry, I'll be coming back to you with some more questions, because it is exciting to know, and we want to know. Robert, you mentioned something in your previous answer that when we were talking about technical assistance and what banks can do outside of financing, tell me, what are some of the solutions to mitigating risk payment? You were talking about that.
Yeah, so most of the companies that are selling overseas, they get a client, a buyer that wants them to ship the product and pay them later. So it is like an open account. And I normally tell my clients to be very extremely careful with that, because it is the least appropriate way to do business with another country. The best thing is to have cash in advance, meaning, okay, send me the money and I will ship the product. But it rarely happens like that in international business. Most of the time, there has to be a way for both parties to be secure in how they proceed with their business. So one of those items that I believe, other than cash in advance, is to use letters of credit, an export letter of credit in this case. So the buyer will go to their bank in the foreign country and ask them to issue a letter of credit in favor of the seller here in the United States through a bank. That letter of credit is basically a promise by the issuing bank that if the seller complies with the terms and conditions of that letter of credit, the bank is promising to pay them. So that's one of the ways where you can mitigate your payment risk. Okay, there are other ways too. There are credit insurance products. So for example, you get the order and you buy insurance on that PO, on that buyer. But there are differences between a letter of credit and insurance. A letter of credit, you will get paid immediately when you comply with the terms and conditions of the letter of credit, and you are paid 100% of the letter of credit amount. In credit insurance, there is always a deductible. And then on top of that, you will have to wait for a certain period of time after the receivable is past due, and then the insurance company will go and try to collect for another period of time. If they fail, then they will pay you back. And there is something called commercial dispute, where an insurance company, if there is a commercial dispute, they will not honor the insurance. They are only ensuring that the buyer didn't file for bankruptcy or refuse to pay or something like that. In a letter of credit, there is no such thing. If you prepare and submit the document, present them in accordance with the terms and conditions, you will get paid. That's one. There are other instruments. For example, documentary collections, which is not as good as a letter of credit, but at least you keep control over the bill of lading, which is the title document, and the merchandise will not go to the buyer until they pay for it. So, you know, there is a way you can mitigate that risk too. And all of those are better than open accounts, because you can ship the product and never get paid.
Right. Well, good. We may want to dive into that, and I hope that our listeners are paying attention to that. Letters of credit in international relations is good. Where you can get it, get it. That is important. Let me go back to Tracy. Tracy, you said that banks look backwards and you look forward. So when is the best time for a small business to come to VC versus a bank?
Well, I'm not sure there's a best time. It's a different time, right? It's companies. Well, if you're not exporting, if we're not just talking about international, you want to go to venture capital or angel investors as early as you can. As early as the stage you're in will attract venture capital. So, you know, it's an art, not a science to it. For international, for what we do, so Brad made a point that people learn about them from word of mouth or maybe their website, right? But if you are a company that had some capital to do proper international marketing, to get partners, that is when you may want to go to venture capital or private equity when you're coming up with a strategy for international, for exporting, not reacting to someone who comes to you and say, oh, we want your product, then you go look for capital. Venture capital allows you to plan and do a little risk mitigation and have a little bit of certainty, because businesses all want certainty, right? And that's the problem right now, is like, you can't get certainty from anywhere right now, you know, a pandemic and everything we're doing. So venture capital allows, you can think of it as breathing room, so that if you received our capital, because it's hard to get capital for exporting other than Exim Bank and SBA and then some banks, you know, and especially if you're a startup, but venture capital, and it's hard to get venture capital for exporting also. Mm-hmm. So, but if you got this private capital, you could do the market research you need to do, the market analysis, we help find partners in the new markets. Have a proper international business unit, an international salesperson. It's to shore up your inventory if necessary. So I'm not sure I'm answering your question, but this is when you would look for.
Well, actually you are answering my question. The bottom line is you should look at the early stage of when you are equitable for venture capital. You should look at when you're planning and when you're going into something, not once you got a deal on the plan, because this allows the breathing room for that formation. So that does answer. That answers that question.
And venture capital, you have to be able to value your business.
Mm-hmm.
Because it's not just what you think your business is worth. We have to have evidence of what your business is worth. So if you're a startup and you didn't have any, if you didn't have any customers yet, or any pipeline of customers, it's hard, or a contract, it's hard to value that business. Mm-hmm. And so this also is used for CapEx. This type of, if you need CapEx or capital for equipment, you can use venture capital for that, which also is part of planning and your strategy. So think of it in that way. It's proactive and not reactive.
Correct. So Eric, let me ask you a question based on your previous answer to us. You compared commercial lending and their underwriting, and you said that you have a more comprehensive and have data points that you look at other than traditional underwriting. Could you go into how your underwriting process really works?
Sure. Yeah, and I'm not gonna sit here and argue that it's completely more comprehensive. It's a different way of doing it, right? It's a different way of looking at the picture. And I just want to your point, actually, I want to pause and just kind of, want folks on the call to think about where we are. What technology are we using right now? Everything is digital. We're on Zoom communicating, right? We're using digital for pretty much everything, and COVID and the pandemic has pretty much accelerated this digital trend, and fintech being a piece of that, accelerated, probably 5 years ahead of what it would have been. And so with that in mind, whether it's, our firm or others in the industry, or your app through your bank, I think there is really value for digital tools, because think about small businesses, you're always up against time, right? You want to do what you love. And so if you have these digital tools that can help you save time and automate, these processes, why not start there? So and then to get to your question, Eugene, we have a unique underwriting model where, it's not just your credit score. We can take a look at your credit score, but we also know, based on your, maybe previous loan history, based on your accounting, based on the number of employees that you were able to pay last month, based on the money in, the money out, your cash flow projections a couple months in advance, just how healthy your business really is. And so instead of focusing on that one number being the credit score, we're able to look at this more holistic picture, and again, lend to businesses who may not be eligible through other financial institutions. I mentioned PPP. the Paycheck Protection Program, which another great, learning that we had as a fintech industry. And for those on the call, I'm sure you all know the Paycheck Protection Program was, stimulus dollars for American small businesses that were hurting because of the pandemic. We partnered with the U.S. Department of Treasury and the SBA to take this underwriting process that traditionally for loans can take some time, boil it down to an application process, and we spit customers through an auto-filled application in under 10 minutes, and then they had the money in their account the next day. So think about that, like 2 days, to get that financing, and based on the tech, and that's all built off of the technological rails that our engineers and our teams built. So, it's fast, but it's also thorough. And it's exciting to, hear these small business owners and startups, say, wow, that was just a really, I didn't even have to fill out the application. It was auto-populated for me. It was just a really great experience. So, yeah.
Okay. Eugene, on that PPP, I think 90% of business owners of color did not receive that capital.
Correct.
And so if it happens again, if they had capital from maybe venture, who is focused on women and people of color, or a firm like ours, they would have been able to make it through this time. And that's why equity capital is really important, and why it's important that women and people of color receive this access to this capital too, because how are we going to grow as a country if 90% of the businesses that are the majority of the small businesses didn't receive this capital?
Right,
So
because
yeah,
I think to your point, because since the recession that Eric mentioned, since 2009, we know that small businesses created 2/3 of the net job growth since that time, and of that, 40% of that was women, and 70% of that 40% was women of color. And we also know that people tend to employ people from their community. So if you want to really have this equity expansion, small businesses, you open small businesses in underserved communities, you get higher employment. So that is true. And so, Tracy, that's a good point to make out. And I'm glad you focused on that.
Yeah, and I'd also pile on just briefly, Eugene, to Tracy's point. She's absolutely correct. But I think what you see when you leverage these innovative partnerships with the United States government, with companies like other fintech in the industry, you see we did over like $1 billion in lending, and the average loan size was $34,000. For a self-employed person, it was $7,000. So these are the micro loans that Tracy's talking about, going to communities that maybe have been turned down from their bank. I think our average loan size was about 1/3 of the traditional average SBA loan size. So just wanted to underscore Tracy's point, is that, we can work towards solving some of these problems with innovation.
So I'm going to change my next question to Robert. I was going to ask Robert a different question, but now we're talking about that. So we have Eric's team going into the loans of 35,000 and under. We have Tracy giving us equity at finance and how we do that. Now there's a big gap, which underserved communities and basically communities across, between loans of 50,000 to 250,000. How is the commercial lending community, the banking community, addressing this?
Well, in many cases, I cannot speak for all banks, but I can tell you that banks are opening branches and presence in certain communities where it is bridging the gap. For example, we opened a branch in different locations in Los Angeles to serve those communities. So banks have an interest, plus they have to comply with certain rules and laws to serve those communities. So most of the banks do, I cannot talk for everyone, but at least I know our bank have presence in those communities to serve those clients.
Okay, all right, Tracy. So Robert says he has banks in those communities. BCs don't have physical facilities or very limited facilities and communities. How do they find you?
Well, we don't need to have facilities. We're not retail, and FYI, we're not microloans. So
Right.
a company like Brad needs more than, $35,000 or $250,000, right? These are companies. This is what venture capital is. It is to help you scale large, and they give you bigger checks. So, but that is a problem in venture capital, because venture capital is 90% male and 90% white, right? So if you don't have a network that will find communities of people of color and women, it's very difficult for venture capital to invest in you. And they tend to just invest in themselves. So that's why our firm is focused on women and people of color. Because if you haven't noticed, I'm a woman and a person of color. So my network looks like me, and I'm going to know people who look like me and those entrepreneurs that look like me. So, you can't be lazy. You can't stay in your office and hope I build it, they shall come. That's not how it works. You have to be intentional and go out there. Why I love TIGM, their founder is a Latinx man, right? And they're in an area in Chatsworth that could use the job creation, if they're still in the area. I think they are. So TIGM is a prime example of a company that we like. And so venture capital is so used to not going out and looking intentionally for women and people of color. I think we could follow the banks in the way that they are going into these communities. More venture capital should actually partner with banks that are in different communities, maybe community banks, maybe credit unions, because the big banks are what failed communities of color during PPP. But it was the smaller banks that people have relationships with, where they actually were able to get this capital. So we need to change the financial system, right? We need to change it where you look at it more holistically. Frankly, you look at it more compassionately for these entrepreneurs, and think about innovation coming from the people who are living the problems that are happening in society. They can come up with the solutions to these problems, and they can innovate around these. And so that's why myself and my partners, we are looking at these communities, because they're going to come up with the solutions and the technology and the innovations that are going to move our world forward, unlike other private equity and venture capital.
Excellent, excellent. So I'm going to switch off to some of the questions we got from the audience participation. And one of the first questions, which I love this question, is from Roger, and it's, going forward, what kind of technology advances do you see in your sector coming, and how do you see the competition evolving? And this is to Eric. What new technological advances do you see?
Brad, actually, because that came up when Brad was speaking.
Okay, well, let's do it to Brad and to...
Throw it to Brad, yeah.
Whoever wants to answer first.
Defer to you if you're there, Brad.
I don't think Brad is there.
I'm here. I'm here. What was the question? Sorry.
It says, going forward, what kind of technology advances do you see in your sector, and how do you see the competition evolving?
Well, this is a subject that is dear to my heart and full of contention, because what we're fighting against right now is a global, we're talking about transportation now, not finance, okay?
Right.
I'm in transportation. I utilize these guys' products, but I do it to develop and send out transportation devices. The push globally to create autonomous individual road vehicles is what has captured everyone's imagination. Everyone thinks that a computer driving your car is going to solve all the world's transportation problems. And this is where all of the funding is going now. This is where all of the interest is going. It's sucking all of the air out of the room. And it's really unfortunate because it's no different from the private rubber-tired automobile sucking the air out of the room and destroying all of the streetcar systems between 1930 and 1960. Individual cars, whether they're driven by you, a computer, or a Martian, it doesn't matter. It's still a four-wheeled individual car driving with one person in it. And the more computers are driving these cars, the more of these cars are going to be on the road, the more gridlock there's going to be. What we need is public transportation. What we need is electric, zero emission public transportation with no infrastructure requiring high voltage in the street. This is what we need. This is what TIG-M makes. So there is a really great feature that's coming out of all of this, and that is the technology to autonomously control vehicles. What we are going to see in the future and what we are working on here at TIG-M is autonomously controlled electric mass transit vehicles. Okay, there's my answer. Sorry, it was a little too long.
No, that was very good and very thorough. Thank you. I'm going to go and look at the screen a little bit here. And this is a very good point. And Brad, you touched on it when you talked about insurance, but Christopher Lynch wants us not to forget about Ex-Im Bank's multi-buyer credit, which is an insurance that covers up to 95% of the risk. Let's go into that a little bit. So because you gave a kind of dismal picture of insurance. So let's talk about that 95% that the government provides.
I'm assuming you are asking me, right?
Yes, I am.
Okay. No, I didn't give a dismal about insurance. Insurance is a very good product when you can find it. So Ex-Im Bank has a program based on countries, amounts, where they can go up to 95% of the receivable. So if you have $100 of receivable, they are insuring 95% of that $100. So, that's a very good program because I believe only Ex-Im has 95. There could be other companies. I don't know every company, but Ex-Im has a very good program to offer insurance to U.S. exporters. The issue is as long as the product is made in the U.S. or at least have 50% U.S. content. Now, at City National Bank, we are an authorized lender for Ex-Im Bank. So we can give up to $7.5 million in loans that are guaranteed by Ex-Im up to 90%. So we give the loan, but Ex-Im insure the loan that we give. There are other products also by SBA, 3 different products that are specific to international. So you have the Export Express, you have the working capital, and they have another international type of loan that that covers equipment and enhancing facilities things like that.
The export loan operator. Just for the audience participation, I was the one that administered all 3 of those loans. So yes, thank you for mentioning that. But I wanted to make sure that
SBA too.
I want to make sure that Ex-Im Bank was there. So let's move on because I have a question that I want to get to all the panels, and I really want to include Brad in this question as well. So here's the question that I have for you guys, and we could take it in whatever order you wish. What can government do, since we're talking about SBA and Ex-Im Bank, but what can governments do to help small businesses access funds, expand globally, and manage uncertainties during this particular time? Let's start with Eric.
Yeah, well, great question. I think it kind of goes back to what I was talking about earlier, where we're on a digital platform, Zoom, right now. Everyone's at home. We're all working from home, right? So what can governments do? In my opinion, the more governments can do to help facilitate digital trade, help small businesses get paid digitally, help small businesses to access financing digitally, you know, the better startups and small businesses are off. Are off. So if you look at you know, this digital age we live in, right? There's a few, in my mind, of fundamental pieces that will change just, you know, the way consumers and small businesses and startups act. Number one being an all digital operation delivery system, whether it's financing or something else. It's happy. Consumers get delighted by that, right? I mentioned the PPP process in under than 10 minutes. That just feels good, and it's efficient. Another piece of this is people want choice at their fingertips, whether it's venture capital, whether it's, you know, other financing. They want choice. If you think about shoppers, they flock to places like Amazon. I'm sure everyone on this call goes to Amazon to shop. They go to Spotify for their music. So they want choice. They also want instant. So think about the financing that we give through QuickBooks. It's instant. Some activities are ones, you know, that people enjoy and look forward to, maybe like for movies, Netflix, but you want it there, you want it now. And then lastly, I'd just say better, cleaner data is going to be another trend that we'll see as we're all digital. And that'll just help with financing. So if you're a startup, you want to go global, there's, you know, you authorize a company like ours to take a look at your data to better underwrite, you know, that loan. I think that's a positive. And to the extent governments around the world can help small businesses use these digital tools, you know, because digital doesn't see borders, digital doesn't see state borders. I think it's a positive thing for the, you know, global small business and entrepreneur community.
Okay, thank you. Now let's go to Tracy. Tracy, take it off mute. And what do you think government can do?
Well, you know, commercial services does a lot with very little, if you ask me, right? And if you compare what Korea does and Japan and other countries do for their exporting companies, it's not a lot, right? So if the government could do more with promotion than they do, pay for more promotion, support companies when they are actually going to, other than the step, you know, they have these step grants, but it's very little money. I think it would be very helpful to companies to have the government really support international trade more. I don't think it does that enough. Also, you know, a lot of our companies need to be up tech. I don't know what the word is, but they need to be more technologically advanced, and their workers need to be trained, at least in manufacturing. So if there were more workforce development programs that the government actually supported and funded to help employees be able to use the job and be part of the jobs of the future. The jobs of the future are clean, right? They're sustainable. And in least in manufacturing, there's going to be 2.4 million shortage of skilled workers. Yes. And so the government manufacturing is one of the foundations of our economy. So the government needs to really help shore that up, and then help these companies sell internationally, because they're already competing here globally. Everybody's coming here and they're competing with global companies. And it's harder for our companies to go and do the same. So we just need a more robust support system for our companies if they want to go international.
Excellent, excellent. Robert, from a banking, if you say regulation, I'm going to kill you. No.
Well, to me, as long as the government, I mean, I cannot say about banking. Banks are trying very hard, in my opinion, at least, to help companies succeed. You know, we want to give loans. We want to help companies expand and so on, as long as the information is correct and the financials are fine. But I believe in general terms, you need to have a level playing field between the American companies and their competition. And you know, we need to expand, in my opinion, the U.S. Commercial Service. They do a lot, as Tracy said, but they can do more if they have more resources, because they are already helping companies establish sales to other identifying buyers for them. Even in the Gold Key program, where they can put you in touch with 3 or 4 distributors in other countries or buyers. And these are fantastic programs that in some cases, companies have no clue that the US government or the US Commercial Service can offer them that. When I tell them, oh, they do that, and they look at me like, oh, we never knew. So if there is more money for the US Commercial Service to advertise and make sure everybody knows about what they do, I think there will be a lot of improvement in how small companies are competing in foreign markets.
Yes, I know there's a knowledge gap when it comes to small businesses knowing what government does supply. And I think that each and every one listening and to their people that they talk to, you should look at Commerce website. You should look at SBA. You should look at Exim Bank. You should, before you do it on your own, don't reinvent the wheel. See what's there. See what is there. And remember that you paid for this already because you're a taxpayer. You paid for this service. Take advantage of these free services that are available to you because they've done a lot of work and research and homework in that. Brad, from a private sector company standpoint, what do you think the role of government can play in opening and expanding in exporting in the United States?
Well, I've already given my pitch for U.S. Commercial Services, who I love. They've done so much for us, and I have to say, pre-COVID, I took part in quite a few trade commissions, and that was really, really great, opening up channels between various countries and U.S. manufacturers, and getting really to know some of the people in targeted commissions in certain countries. And that really helps in letting that country know what we can manufacture here and how we can get together. More recently, I'll have to say that I really recommend that everybody listening, you really need to look at Exim Bank. I mean, they have been so helpful to us. And as Robert says, they have a new mandate. It's a much more stable situation now. We've been with them over the years, and they have helped us in many ways. But just as an example, I have a new commissioned representative in the country of Turkey, and he has developed a lot of interest there for us. And I called our local Exim Bank representative. She put together a panel of experts for me, and within 2 days, I was on Zoom with 5 of the heads of the divisions of Exim Bank. I was on with Global Infrastructure Division, Industrial Finance Division, Export Division, and they all just put their heads together. And within 2 days, we were on a track to solve the problems that I have to finance major projects over there, hundreds of millions of dollars each project. And within a week or so, I had a letter of enthusiasm. She called it. She was so enthusiastic. It was supposed to be a letter of intent, but or a letter of interest, but she called it a letter of enthusiasm. And really great, and got me in the door to the mayors of 3 cities in Turkey. And this is an incredible amount of help, just getting in the door like this. So, and then after that, we have to get the market ratings on all these cities and find out how we can finance these projects. But Exim in several different categories can either guarantee or direct loan for these major infrastructure projects. And I have to tell you that when they asked me one question at the end of this big panel, is this going to create U.S. jobs? And I said, absolutely. And they just went, we're in, we're all in. Right. Let's go. They're really focused on creating American jobs, which is obviously what we need now. So the government Exim is interested in helping us create more jobs. That's my experience.
Yes. Well, very good. And I would also say to you as an SBA person, everyone that thinks our mission is to promote small businesses. No, it's to create jobs. We use small businesses to create those jobs. So that is something that is good. And for all the people who are on the participating, I want to thank you for joining this panel and for joining this series. I hope that you do register for the other series that are coming up and what's going on. I want to thank our distinguished panel for the questions and answers and talking about finance. I hope that our audience got some really good nets here. The one thing I want to copy on is that the first question, which all three panelists agreed to, and that is, get your financial papers together. If you're a new start, you're a startup, get your forecasting and your performance together. That is better than a beautiful business plan. Not plan, card. Make sure you have that in order. Make sure that you know what kind of money you need. Do you need something less than 50,000? Do you need something more than 50,000? What markets are you going to be looking at? That will determine where you go. Do you go to a platform or do you go to a commercial bank? Do you have something that is really valuable and you're able to assess that valuable and sell it to a VC? You want to make sure that you are paying attention to the answers that was given tonight, because they were very concrete, they were very detailed, and I was very pleased with the level of commitment to these our distinguished panel in answering these questions. These were awesome. I really appreciate it, everyone. I'm going to now turn it over to Michael, and he's going to close out the session, and I want to thank everybody again for participation.
Thanks, Eugene, and the panel, Richard and Brad, thanks tremendously. Perfectly done. We've brought together different experts from different sectors within finance and funding. I know that when people come in to our accelerator, the cross-border funding and finance issue they're wary of it. They're scared of it. It's confusing to them. And with all these resources from all these different sectors and the experts we have, it's not that scary if it's done well and the resources are out there. I totally agree with Tracy that the government should be doing far more in this sector, both for people of color or just even startups. Our graduates are 60% women owned and 50% minority owned businesses. So we see that need and the wealth that's in there of innovation and coming up with innovative solutions to the problems that we face now and in the future. And we wish we didn't have to be that gap between what's out there that the government does have, albeit a lot less than Korea, Japan, and others. But we can introduce our founders. And I'm saying this to all the attendees, if you want to contact these esteemed panelists and participants and anyone else, the IBA sees itself as a concierge in the ecosystem. Because we're nonprofit, we're not taking equity, so we can happily say, go see Tracy. She can answer the questions and hopefully things work out. We go to City National. We don't have a bank as a sponsor. We can give you many banks, but Robert obviously would be one of the first ones. Commercial service, we make referrals to them all the time and vice versa, and that's how we work. So please look on the IBA as a resource. We're at iba.io. Also, lastly, thanks to the Global Innovation Forum. As Eugene said, please go to globalinnovationforum.com. We have 4 more series in this great thing that we're doing. We'll have a recording of the first one. Obviously, you're here enjoying this one, and we'll have the 4 more coming up. So globalinnovationforum.com, and then go to the top menu and under Global Startup, you'll find all the information about the next 4 that go into mid-December. So again, thanks everyone, and we'll see you next Monday.